Hi everyone, it's Stuart here. Hope you can hear me loud and clear. I've got no camera tonight, unfortunately. I'm in a different location to normal. I'm not in my normal home studio. So, um, to be honest, the background's a bit naff where I am at the moment. So, I've rented a little office, but the background's awful. So, and I haven't had a shave here, so I look a bit of a sight. So, anyway, I hope you're well. I hope you've had a good. It's Wednesday, isn't it? Wednesday the 18th, middle of the week. The chart on the screen there is the 4-hour chart of cable. Sterling this morning. Well, dollar's come back quite significantly against most of its peers over the last couple of days. We had this morning better than expected inflation data from the UK. The CPI data came in bang on 3%, down from 3.5% last month, and ahead of expectations as well. Obviously, yesterday we had that issue about unemployment at a 5-year high, particularly youth unemployment was looking pretty spiky here in the UK. So if you just have a quick look at the Forex Factory calendar, you can see the data this morning. I'll come back to the RBNZ in a minute. Came at 3%, so much better than I'd expected. Although it was expected to get down quite significantly. The actual confirmation of 3% was really positive. And we've had a bounce back in US stocks today as well. Excuse me. Right from the start, futures were higher this morning, and we had a strong start for the cash session, helped by the better than expected durable goods orders. Look at that core number, 0.9 of 1% for the month of January, and the actual headline wasn't as bad. It wasn't as negative as expected. Came in at minus 1.4% compared to expectations of minus 1.8% from that big revision of 4.5% for the previous month as well. So remember, durable goods, those sort of goods that sit around for more than 3 months, they don't deteriorate. So tend to be high value or relatively high value impacts. So things looking okay for the US economy. This sort of worry about sort of recession this time last year has disappeared. Earnings have come in quite well, but we still continue to have that worry about the and whether it's just market chatter, and but your market chatter can take things quite a long way about the this massive eye-watering investment in the AI stocks and the capital expenditure from the big MAGA 7. We've had quite a hit on some of the tech stocks, individual tech stocks. I mean, Palo Alto today is down, I think, 7%. Big with the AI is going to take it all away, but are you really going to have your cybersecurity out to an AI robot at the moment? Are many businesses actually going to make that decision currently? But the drive for improvements in productivity continues, and so I'm using this is the Nasdaq on the 4-hour. If we look at the daily, we went down, but we've bounced back quite significantly today. So big move down last week on the 12th. Down on Friday, down again Monday. Not quite sure what was going on yesterday. All over the place, huge, and we ended up where we were really, but we were right down to test these lows into that 24,000 zone again here on the Nasdaq. Obviously, we were closed on Monday, but obviously these derivative markets were still making a market, but we've bounced back quite significantly today. Still anchored under the key 25,000 level. All the major indices are around those key levels. So 25,000 is where the Nasdaq 100 is having a go. The Dow is again back in the 50,000 zone. Is 50,000 up here. We're at 49,700 at the moment. So again, Dow up today, and the SPX, the S&P 500, just still shy of 7,000, but also having a positive day percentage. That's the S&P final. So far today, we are, moving forward. So stocks on the up. Durable goods, to say, was good. obviously, we're waiting the minutes from the Fed. Now, it is tallied as a high impact event. It's out in about 3 minutes, but obviously, it's a backward looking event. It's what the members of the Fed, both the voters and the non-voters, have all had speeches since the meeting. Obviously, there's a lockdown the week before their meeting kicks off. They have their 2-day meeting. They have their rate announcement, and obviously the press conference at the time is quite significant. But this, so it's still, don't get me wrong, it's still a very high impact event. And the other key, the positive thing on the other side of the seesaw is that this is what history will tell us what went on at these meetings. So these are official minuted meetings, and this is the official record, and that's why they're important. Some of the nuance within the meeting only comes out in the minutes, and when I say nuance, I mean the sort of discussions that different members had and how it was minuted, how it was actually documented. So that's why it can be quite important. So there can be some keywords in there or not in there that can certainly move markets, and that's happened in the past. So obviously be aware of that as that drops in the next minute. Let's just let's take us to let's have a look at the stock market, the forex market. So the dollar's stronger, 117.90. The euro sits at the moment. Let's come down to our 5-minute time frame, or let's do a 2-minute time frame for the sake of see the action. And so, as I said, dollar's been stronger all day. Obviously it's only on the 2-minute, but it's been stronger all day, and the trend remains to the downside. So let's see how this reacts when the minutes drop in a minute or so itself. Michelle Bowman was making some remarks early, and she was talking about still worried about the labour market, still worried about the jobs market. So and the softening of the jobs market, which has been going on for a while. But obviously, then we had that fly in the face, that big blockbuster non-farm payroll number that we saw on last Friday, and the weekly claims continue to show robustness within the US jobs market. So obviously we've had a quiet few days when it comes to geopolitics, but they're ramping up. They're still talking, the Iranians and the Americans out in Oman, but both sides were saying there was progress yesterday. There's been less positive comment today. Obviously, the situation in Iran, as the US carriers continue to move into the Gulf, continues to ramp up worry, and the oil market has moved up quite significantly. So let's all look at these. I haven't got to the how the minutes have dropped just yet. They're just coming across here. Adjustments are appropriate to of inflation largely rather than jobs. So it's again what we saw. Concern that bringing down had stalled, anticipated inflation. Several saw more cuts to come. So several members saw more cuts if inflation declines as expected. So if the continued decline in inflation is confirmed, which is basically what they're looking for, we could see perhaps a significant move. So just before the minutes dropped, I mean, that's not particularly. There's nothing particularly new in there, but that's what I was saying just a minute or so ago. In fact, this is now documented and written down. That sort of it sort of gels many minds or many investment decisions, particularly. So more cuts to come. So if we just look at the Fed Watch tool, obviously we're not expecting anything. This is the where the market looks at what might be coming with regard to cuts in interest rate. We're not expecting anything. Obviously, nothing to happen in Chair Powell's final 2 meetings in March and April. So 94% chance at the March meeting that there's no change. We remain in the 350 to 375 range. 26th of April, just as bad, or not just bad, or just the same, about 78%. We get to June and July. And this is what shifted following these strong jobs numbers. There was a quite high, strong anticipation that we would have moved by June, and there's still a 50% chance that, or 60% chance that we will have had some sort of cut, and an 11% chance of a 50 basis point cut by the June meeting, but still a 37% chance or 36.5% chance that we won't have any cuts by the June meeting either. So this is 51 and 11 and a half. So we add those together and we get 72% chance of some sort of cut by the June meeting. The anticipation of that happening was a bit higher. And we've got a very significant, obviously by July, it's virtually nailed on that we will have some sort of cut, and more than a 25 basis point cut is now over 30%. If you add these two together, you see this is a 30% basis point cut, and only a 22% chance of no change whatsoever. You can see that how it's changed since non-farm payroll last week. So you see it's actually the move down has gone up, and the chances of it moving has come down very significantly. Yeah, that's gone down to 22 compared to a week ago before non-farm payroll, and 21% yesterday. So see if that changes following those minutes. We'll come back to that in a minute. Anyway, as far as the markets are concerned, we've had a sort of a bit of surprise weakness in the dollar, but there's the number dropping there at 7 o'clock 1900. So the trend continued, dollar up, a bit of a tweak up on the probably that headline that was running across both the Reuters and the Bloomberg terminal there about several members saw inflation, more cuts to come. So perhaps the idea that the market is priced in 25 basis points cut, there might be getting to 3. Obviously, Walsh, if he's confirmed as the chair, which looks like that's going to happen over the next couple of months, would be more agreeable to look into bigger cuts. Stephen Myron obviously wanted 50 basis points cuts. Another headline here: several would have supported two-sided language on rate path. So instead of the confirmation that or not giving any direction and being data dependent, some members, presumably Myron and others, would have had a more balanced statement with regard to future rate cuts. So a future outlook being a bit more deterministic to the downside. So dollar's given up a wee bit on that. So we euro went to 117.85, and well, it's only 5 pips, isn't it? 117.90 to the upside here. So negligible move. Obviously, if you short this on this trend today, which got to the hourly chart, see the trend today has been very strong to the downside. This was this afternoon. At the 1 o'clock candle before the US market had opened, we've been drifting lower, moving lower all day. This is the opening 7 o'clock candle from the European Open this morning, and so we've moved down quite significantly from this 118.40 zone we were in above the Asian session, start the European session, and we're all the way down here at 117.90. So we're under the key 118 area, which had been our a pivot area to the upside. Yields this earlier had moved down. The 10-year yield had moved down to 4.0675, and we're back now to 4.80. So that's quite a significant uptick in the 10-year yield during the day today. Obviously, we've had the durable goods data, which has lifted sentiment, lifted the stock market after Monday's close. But the headline is running either on my Reuters headline here, and also on the Bloomberg. If you've got Bloomberg on your YouTube channel, you see the headline they're running is that several were looking for a more strong inflation continues in this downward spiral. So the dollar is gaining strength. Obviously, if they're going to cut rates, you expect people moving out of the dollar, but this is a sign of the strength of the US economy lifting the dollar. So euro under 118, and it has been since 6 o'clock, and we're on 17.80. So that's continuing to move down. This chart we started with, which was the cable chart, which has been a week today. We were short this one hit our first target yesterday, and we pulled our stop loss down yesterday and we reversed to it, so that one was closed, but we now moved lower and we're now into a key area. We found support at 135. We're now back to it, literally just over 24 hours later. 135, big round number. It's 135 as well. It's a key level for cable. If we just take the daily chart, you see this 135. Oops, and it's 135 level. So it's a key level as resistance as we were moving up here during December. And we ran right into that. So whether this finds support here, it looks like a bit of a triple bottom, we could argue. Is the dollar going to move up, weaken again, but or have we seen the bottom in the dollar weakness? The cable went to over 138, couldn't quite get to the next uptick, was 139, and obviously then 140, but we're now back, all the way back 300 pips lower at 135. The Aussie has been really outperforming against the US dollar as well, and that's now back from 0.71. We're at 70 under 70.50 at 70.48 this morning. Sorry, now. But you see how we've stalled up here as we got to 171 plus. Sorry, 0.71 plus, and we're sort of consolidating. Still at highs, but we're down today. Aussie still, not as weak as obviously just seen there the euro and sterling. Canadian dollar has had a really good run as well, but that's also under pressure. We're also under 137 today. Into again another one that's into a key 135 level towards the end of January. So dollar came back and then looked like the dollar was going to rally at the beginning of February. That turned around again for the best part of a week, but now we've turned around again. So dollar back up against the loonie and 36.90, still under 137, but we are on the upside. That's all right. Yes, that's some old messages. Sorry. So that trend looks pretty set as well. So consecutive 1, 2, 3, 4, 5, 6 days to the upside for dollar against the Canadian loonie. Yen 154.75 tonight. Again, dollar bouncing against the strong run we had for the yen post election for Sanye Takaichi, and dollars come back. So perhaps we've got a bit ahead of ourselves about how strong the yen could get. So that 152 low that we saw at the end of January, ahead of the election, we haven't got back down to, and we've bounced off. So the lows are a bit higher, and last week or so the highs have started ticking up a bit more as well. So dollars back against the yen as well. So the yen weakness might be rekindled as we move forward into the final week of February next week. So dollar again, big strong day. So some significant candles today. Gold. As we said before, shy of 5,000, but bouncing relatively significantly today, having had two down days, Monday and Tuesday this week, back under 5,000. So interesting. I put this line on when he was speaking in Davos at the end of January, and it's played out quite significantly. You can see it's turned into a key support area. So I left it on at 4885. So 4885 has been support for the last week. So that's staying there, and we've bounced off it. What we need to do for all you gold bugs is push back through 5,000 with a big, strong bodied candle through the 5,000. As you can see, the 20-day moving average now sits smack bang on that 5,000 level. The top of the Bollinger Band has flattened out completely at the 78.6 of this this decline down, and so we've got lots of congestion here. So we've got the 50% fib level of the big shakeout we had at the end of January, So that's where we are now. That's where we're pivoting. That's stuck at 5,000. The 20-day moving average is now going at 5,000. 5,000 is a hugely psychological number. It involves fives and zeros, so we're stuck there as well. The next leg up, the next fib level up of this to retrace back for the shakeout at the end of January takes us to 5,150. So 5,150 is where the 68.1, the golden ratio on this fib shakeout is, and we haven't got close to that in a week or so. Equally, we've got support at the 38. So we've got three key levels, and the middle one, the 50, the 20-day, and the 5,000 level is where we are pivoting into. So we need to break away from that either to the downside, and that would be a break at this 38.2 fib level at 4,862. We've come quite close to it last 3 or 4 days. Haven't broken away from it. Haven't broken away from this one, and we haven't broken through that one. So consolidation is the name of the game for the gold market. Sideways action on an end of day basis. So look how gold has reacted to the minutes coming out. It's got the 5-minute chart, so it's been drifting down from 5,000, but that's momentum down from 5,000. We got a bit of a cross here on the so that would have gone. You would have gone long here on if you're using this cross. If you're using this Bollinger Bands and stochastic mean reverting strategy. There's our cross. There's our actually that didn't trigger because we haven't had a top of the Bollinger Bands all the way back there. So we've been looping around. That hasn't played out. We've gone down, down, down. We're looking for a cross to the upside after having a touch on the outside here. 1, 2, 3, 4, 5. Kept going down. Started to turn around. Got some clarity between the move it up. Clarity between the K and the D line. Finally on that candle there at 1855. So you could have taken that ahead of the minutes because that was 5 minutes before on that one. First target would have been a few dollars higher at 4,993. We'd have got in at 4,987. So it's got a lot of pips there, isn't it, if you're trading the gold? And second target, I mean, technically, where this strategy works is the top of the Bollinger Band. We don't look like we're going to get there because we've got strong move up in our stochastic lines, but we're just struggling to get through the target one. So taking at least it's probably 50% of your trade off at that key line. If we break through there, will we get back to 5,000? Possibly. Excuse me, but struggling for the last 15 minutes to get over our 20 period on the 5-minute. Guys, as usual, if there's anything else you want to have a look at on a higher time frame, a lower time frame, you want to look at a different setup, please let me know in the chat box. Here we are. Sorry, Matt's here. Matt's saying, what do we think about gold, mate? What do we think about gold? Well, here I've just said we are a strong day. So the daily chart is, as we just said, daily chart is positive, Matt. That's the hourly chart. So this is the hourly chart. So that's been up and positive. We're sort of in an overbought area here on the hourly chart, but we've ran into the 5,000. And yeah, absolutely, we have hit 5,000. Whether we're going to get back there since the data, we'll see. When did you put that up? You put that comment at 13 minutes past, and that's 3 minutes ago. So maybe, but the hourly chart there is suggesting that's a bit of a rounding top, and it's a bit of weakness. However, that's the hourly candle there, the 6 till 7 candle. It's just finished 15 minutes ago. It's quite a significant down candle, but we have been moving up all day. So profit taken at 5,000. What that looks like. If you're trying to scalp this, Matt, as we just saw there in the 5-minute, it drifted lower. It's drifted lower, found a bit of a rounding top bottom here again. So we've moved up, got to target 1 here. We're using this strategy. This strategy is a very simple Bollinger Band and stochastic. Stochastic set at 1063. You're looking for a cross of the stochastic lines. But there's 2 steps. The first step is a touch of the outside of the Bollinger Band. You can use it on lower time frames. I tend to keep it at 2 minutes, 5 minutes. But if you're scalping, you're chopping and changing all the time. So that's moved up. We go down to for instance, let's go down to the 1 minute chart. We'd have already probably moved up and reversed on the 1 minute. So there we are. So 1 minute's moved up, got to target 1, got to target 2, and now it's looking to short. A bit of a short there. It didn't move down, did it? And up. So that's why I tend to keep it 2 minutes, probably not quite as choppy, but you can see that there you are, 2 minutes. There you are. So the 2 minute has got to target 1, got to target 2, the outside of the bottom. It continued to move up because the stochastics are still aligned and still moving up. But you can see that here on this short term, you still the gap to 5,000 is still $5 away, or even $9 away now. So it doesn't look like we've got there. So it's rolled over the last 10 minutes to the downside of that big candle up. So that looks like our current sort of 2 minute resistance at 4,994.20, and now we've been down and then moving down. You can see so support or target. If you short this now, it's rolled over because it's touched, but we haven't had a cross. So it's this. Although we've had a touch of the outside of the Bollinger Band, that's completing that uptrend, and you could have re-entered on that reverse and that move down there. You might have even, knowing me, I might have got in. Hang on, when did that get? That got to target there on that, so it was still moving up as it went down. So I might have got pulled in on that candle there, the green completion of that green candle. Then it's gone up again, and we're still moving up. We haven't actually got into the overbought zone yet, but we know we can remain overbought for a long time. Obviously, Matt, again, your comment about 5,000. Look, it was 2, 4, 6, 8 minutes over 5,000, and gave it up. It's a bit better earlier on. Around about this is the European and London close here at 4:30, so it was 2, 4, 6, 8, 10. So it was about 20, half an hour. It was over the 5,000 level there between 4:30 and 5 o'clock, and it's giving it up again. It's giving up again. That's the current low, the evening low. US session is still running. So yeah, moving up. So there we continue to move up. So the stochastics you see are still moving high, and the price is still moving high. So we've had that little retrace, and then we're moving up to a 449, and we're pushing at a new recent high. So gold having a good day. And again, I don't know how you're trading it, what time frame you trade it on, Matt. Let me know. But we're still $6 shy of 5,000. Let me just show you the oil market, because that's had a bid over the last few days. It seems to be, although there was positive spin yesterday from both Iran initially and then the United States about how the discussions were going, Oman, and they are still talking. The team. The worry is, the market is not convinced. So we've got this move. Sorry, it's 2 minutes. We got this move higher for oil price. We had Iran yesterday closing partially the Strait of Hormuz. Remember, that's the area where there's the pinch point in the Gulf that Iran controls. I think it's about 20. Is it 24 miles wide? It's a bit like the English Channel. It's not very wide, or is it a bit wider than the English Channel? It's significant, and it's a very sensitive area, and they talked about partial closure of that and tracking. So that spiked things yesterday. Sorry, I just got the daily for oil. I'll come back to your question in a minute, Matt. Yesterday, or this morning, I should say, and we've had a strong day. So we're over 65. It looks a little bit overstretching this move up, but there's been a very strong day today on the chatter around that. Added to the issue, the Russian and Ukrainian situation doesn't seem to be improving. Putin's in no rush or mood or likely to accept anything other than complete takeover of the Donbass, and Ukraine not having any of that. But so that the missiles and the drones keep flying between the two countries, particularly from the Russians into the Ukraine area. So that tragic situation continues, and oil is bid here as we've seen this move up. So sudden announcement: the Iranians and the US have got a deal. Some talk about ballistic missiles being included. and then it's unlikely the Iranians are not going to go for that, but pressure from the US. But the rhetoric still suggests, pressure, power will tell, and Trump's not going to back down from a fight. We've seen that in many parts of the world. Matt, check the 4 hour and 1 day, then trade on 5. Oh, that's your approach, is it? Okay, yeah. Well, that's fair enough. Let's do the same then while you're here. So, absolute high time frame, then trade on the 5 and the 15 minutes. So, what's the daily time frame challenge? Well, as I said earlier, we're consolidating on the higher time frames. We've got this strange level where I put in, as I say, at Davos when Trump started speaking. That's where the oil gold market was. But remarkably, this week it's provided a key support area. So that is now, it's as good a support area as any. 4885 on the daily, and resistance is 5,000. We can't break out of it. So we've been weak for a few days because we're under the 20-day moving average. That's my take from the daily. We're under $5,000 and we're under the 20-day moving average. So it's biased to the weak side. As I say, these are the areas on the lines we talked about earlier. The 4 hour time frame is a wee bit more positive, but the consolidation is a bit more exaggerated. So you can see the extended exaggeration into this Trump speaking at the 4885 level, but you can see we can't move away. We've got flat 20 period moving average. You've got a flat Bollinger Band, so it's sideways. So it's mean reverting strategy you want to be looking at. So on your 5 and 15 minute time frames, my friend, you want to be looking for buying at the bottom of the channel. If we get down to this Trump area here, this one here, and then selling towards 5,000 or just beyond 5,000. So I'm guessing you've done a similar thing. So the 15 minute, there's Trump speaking. That was earlier. When was that? Was it today? That was just early doors this morning. We've been rallying higher and we ran into 5,000. There's the top of the channel. There's the bottom of the channel. So we're bang, 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 bang. We move back down. But as we just said, the last hour we're moving back to the top of the channel. But again, you see this 15 minute, it just can't break away from it. So lots of targets around this, stop losses, target levels all be set around 5,000, positions being filled out to the upside. So positive 15 minute candle, but or the last 3 have been, but we are in the under half of the Bollinger Band, but we're moving up. We're under the 20 period moving average, but we're moving up. Rounding top on the Bollinger Band, they're coming together. You can see the squeeze, the top's coming down, the bottom's coming up. That is usually a sign of potential explosive move to come, like we had here. See the little squeeze we had here? Top came down, bottom came up, and bang, off we went after a long period of consolidation. So we got a similar action here. So we might see this tonight into the close, or we might see this in the Asian session tomorrow. Remember, a lot of the Asian markets are closed. We've got the Lunar New Year. Happy New Year to you all in Asia, celebrating the New Year of the horse, the wild horse, fire horse, I think it is, isn't it? And Ramadan starts as well tonight. The Lunar New Year, the moon. So best of luck with that, my friends. Very dedicated and very, very serious a month of Ramadan for all my Muslim friends. Big move up. It's not a big move up, but yes, going back to the 15-minute chart, we've moved up. So the 5 minute will be quite bullish, like we just saw on our 5 minute charts. Having moved down, moved up. So there's our target, and it's it's moved against us. So if we'd been trailing our stop loss up, that would have stopped me out now, because I would have had it here on this 5 minute. I would have left it as it got to target 1. I'd have taken 50% off. As we just said a minute ago, 5,000 looked like a bit of a step too far. Looked positive, but my stop loss were in really tight on the second half, so I wouldn't have wasted giving back too much profit. So I'd have got my target 1 at the Bollinger Band, and then the target 2. The stop loss would have been here on this candle here, 2 candles back from the previous candle, and now it's just stopped out there. I'm not short. Don't want to go short because we haven't had another signal. And the stochastics lines, the K and the D line, are still moving up, but we've had a tweak down in the blue line, so they may be touching, and then we may not get into an overbought area and then move back down like we did here. So you can see the blue here flattened out, and then it moved down for the cross. It's topping out here, but looks things just like it does here. The blue line, the K line runs sorry, the D line pre-runs the K line. So you can see here the blue crosses from above to below, the orange we go down. Blue crosses from above to below, from the orange move down. Here the blue moves from below to above the orange, we move up. And there we go. Literally, it's, as you can see it, my friend, it doesn't look like it wants to get to 5,000. So 4,976 now, so $25 away. So something may have happened coming into 7:30. Somebody may have said something, but that's a significant move at the moment, isn't it, compared to all the other candles? So something's happened. Somebody may have said something. Trump may have tweeted something. Who knows? Is that still? I don't think it's the feedback from the Fed minutes. That's done. But let me just. I'll come back to the Fed Watch tool, see if that's updated at all. See if there's any other numbers around the. Or if it's just the fact we're moving into the 30 time frame. Excuse me. It's got very, very cold. This office I'm in is just as everybody's gone home, obviously, and it's freezing. There's a very small heater in the corner. Never mind. I'm minded to switch the camera on and see how manky it is, but never mind. So Fed, all Fed officials favoured, almost all Fed holdings holding rates steady. We knew that. A couple officials favoured a cut. The minutes of the end of January meeting says again there's nothing new in there. So the only surprising bit I think was the idea about they may be more minded to look to move lower. Most participants caution that the path back to 2% could be slower and more uneven, and that's been some of the comments of those incoming members of the Fed. Remember, the membership churns, and so there's two or three quite dovish, not wanting to move with, preferring to get the data right on inflation and not move too quickly on on rates, which is why we sort of stepped back from a June to a July before the first cut came in. But since then, the strong data, we said June, the strong data from non-farm payroll pushed it back again to the July idea, and then the PCE data on Friday was it's this Friday, isn't it? PCE data incoming. So we'll see what that looks like. So that could be even more key than normal. Friday's price PCE price index. So we've still got decline there, Matt, in the some reason. Oh, there we are. In the gold market, so down we go. So Bitcoin, guys, anybody? We've bounced a wee bit, but we remain pretty moribund. 66,000, so we're down again. And I threw on for some reason my connection's gone. Yeah, absolutely not trading it. Again, trade what you see, not what you think. If you're a 5-minute trader, I'd have been nicely long on that gold and then got snapped as it moved down. If I just take up to my Bitcoin chart. Come along. That's what happens when everybody goes home. There we are. Can you see that? That's the daily on the Bitcoin. There's that spike, intraday spike to 60,000. There's 65,000. This is a daily trend line, the bodies of the candles. And today, we've breached that, negative. If you'd drawn your trend line from the wicks, I mean, it doesn't really matter with trend lines. I am terrible trend line drawer. But if you'd drew it, I should say, from that 60,000 wick to the body of the candle earlier in the last week, we breached the first trend line yesterday. This wedge, this triangle, you can see the flat top triangle at 70,000. If you'd drawn it from the bottom of the body of the candle, which is more significant, especially with the volatility we get with crypto. I'm not saying any one is right or wrong, but the fact is, it's touched the wick there, it's touched the body of the candle there, it touched the wick there, so it's had 3 or 4 touches. So it's a significant. Sorry, it's that one there, isn't it? It's that one there. It's a significant line. This first one here, this blue one here. Let me change the color of that one so make that. You can see what I'm talking about. Make it. So this blue line here, the more, because it's the bodied one. What's happened today is we've breached that, and we're back, heading back towards 66,000. Obviously, the day isn't over yet, but that's a significant breach of quite a key a daily trend line. So perhaps more weakness. So if we've got a triangle like this, we could have an equal, an opposite move back down to the 60,000 level quite easily, and that's where interestingly the lower Bollinger Band has actually breached the 60,000 level in recent days. But again, you can see how the Bollinger Bands here, I hope you can see that, how this is coming down quite aggressively, and it's coming down. This was starting to pick up after we've had a few days upside, but we can't break and move away from the 70,000. The 20-day moving average now is crashing into the 70,000 level, so it makes this a bigger resistance level. And again, I haven't put a fib on here, but if this was the low, the 60,000, this last leg down here, just for completeness, and the high of 97,500 at middle of January, you can see the 8.2 sits right on 75,000, and the first fib level is now at the 70,000 level. So it adds more weight to those levels there. If you can see that, hopefully you can see that. But I don't know. Got any crypto traders out there? Whoops. There we are. So I think we're certainly closer to 65,000 than we are 70,000, and the magnet that pulls us perhaps to 60,000, the trend moves down. However, on a positive basis, we've got these Bollinger Bands squeezing in. We've had this consolidation under 70,000 for best part of 2 weeks now, and so we could have a breakout. But we went sideways, didn't we, here for a lot longer than a couple of weeks. This is end of November to the beginning of January, so that was 6 or 8 weeks sideways. So we just had a couple of weeks here, so this could go on for a while. So a big breach and breakaway from 70,000, another test of 60,000 cannot be ruled out for Bitcoin, I would say, on that. So anyway, let's have a look at now that the data has been out for over half an hour. Let's have a look at how the FedWatch tool, if it's changed at all recent in the last 20 minutes or so. So the key meetings are really the June and July ones. So June, as I say, was 51.5 and 11.5 before the data came out. That hasn't updated at all, actually, whether it's actually not updated. So as of the 31st, 123. So it hasn't moved. Yeah, the expectations for the June meeting remain the same. We are currently in this range here, 350 to 375. So there is you get all this up together. By June, the market is anticipating, a 70% plus chance of rates being cut by then, a 36.5% chance of no change. So it's more likely that we will have cuts by June. That's what the options market are telling us, and certainly by July. This is obviously June. It will be the first meeting for as Walsh as chair, assuming he gets the nod. By July, it's as we say, we add all this up, and there's only a 22% chance of no change by July. So depending on data comes in better than expected, we could move down here, and near 5% of market participants are looking at a possible 75 basis point cut, but that's a risky bet. I would, if it comes in, congratulations, but I don't think we'll be there by July. I don't think things are going to move that quickly, but who knows? Never say never. Obviously, impacted the tax bills coming through the fiscal stimulus. We're much closer. We're into the second half of the year. Then the mid terms are very much around. God knows what other things will have come out geopolitically, economically. But the boom in the tech systems continues. Will we have had the shakeout of the AI stocks that many were talking about? Or is it already over? Or will we start to be seeing some numbers coming through to realise this massive capital expenditure that they've committed to? Again, only time will tell. So there we go. So minutes. Let's just recap. I'm going to leave you now, unless you've got something you'd like to have a look at. Obviously, I'm here for you. So, is there anything else you want to have a look at, Matt? If you want to have, I don't know what your let's you're the one speaking to me. Let's go back to our gold chart and see where we would have been. I don't think we need it to this mean for some reason I lost the link. That's Bitcoin for some reason. That's our update. That's our daily gold chart. Let's go back to our 5-minute chart. So there we go. That was a big move, wasn't it, into the bottom half? So what we're looking for now is for this to cross up to go long now, because we've touched the outside of the Bollinger Band here on the 5-minute. But as you can see, it's crossed. The orange has gone above the blue line here. So that actually would have triggered a long there, having that shakeout there. But I wouldn't have taken it simply because the stochastic lines are pointing down. We're going down, and there's the impact of this big price action here is still influencing this down, even though that has crossed to the upside. So we've gone up and it's come out. So we've moved up, out, stopped out, and we're waiting to go long. So although this has touched the outside of the Bollinger Band once, twice, 3 times now, the stochastics are still pointing down. So I wouldn't have taken a long position on that until these turn to the upside. And that's why I don't really use this much on the gold chart, much more on the stock markets. And I'm off to go and do some short-term trading myself in a minute. And the Dow and the Nasdaq are my 2 preferred situations. So this trend out again is a good example of how the trend can outweigh the mean reverting strategy. So this is a mean reverting strategy, looking for it to turn up, and that again, it's signaled to go up there. It's signaling to go up here as well. This might actually be just about to play out. We'll see how that tends, because look, we've touched the outside the Bollinger Band there. See what I was saying before, but the stochastic is still going down, so it's too early. We haven't ticked. There's a bit of a tick up there, so that would have. I mean, the gap isn't great, so I wouldn't have taken that. And that's when the data came out, so I wouldn't be trading that, even though it ticked up. So the impact of the data in the minutes has taken the prices lower. So although we've had a good day, going up to the higher time frame, the higher time frame is probably still positive. It was positive all day. It's just turning negative now in this last 2 hours. But this is the key data of the day. The durable goods came out at here at here in the 1 o'clock candle. So that's pushed us higher. So we've got a current day high at 49,895. So shy of 49,900. And that's obviously, you can see we've at the end of the hourly candles stuck there at 49,800, 850, and now we've moved down. So the current trend is to the downside. So we go back to our 5-minute mean reverting strategy. So we've moved lower here. There's the outside touch, now down, and we need to see this move up and into the out of the oversold area, and the blue, a bit of distance between the blue and the orange line before I would buy that. But that's looking a definite possibility at the moment, given where we've come. But where have we come? So we need to look to the left, where we didn't get as low as we did on the open. Interesting, the open took us down there at 49,432, but we have got pretty low. We've got into that low there. So yeah, this may be lower the day, a support area, initial support area. So you can see where we're through there. So it may be a bit of an interesting potential if this starts moving up. Potential long there on the Dow with this mean reverting strategy. Okay, if we were using trend following strategies, for instance, our MACD and our SAR, for instance, here on the 5-minute, that's still short. There's the big cross up here. There's the cross, so you've gone short, gone against you. That's the next. You've gone short again there. Here at 25 past 6, and it's been short ever since because it's been again gone an alignment to the downside. With this strategy, the most important is the cross of the MACD and the signal line. MACD 12, 26, and 9 standard settings. So we're looking for a cross of the MACD and the signal line, the blue line, and the orange line here. So that's the first cross, and then we're waiting for a flip of the parabolic SAR to confirm the short. So that would have gone short here at that point there. It's gone down, 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 down now, but then we flicked back. So that would have been a losing trade because we don't get out until that's there. So that would have been short there, and that's up there. We stood there. It's then gone long, but we're still short. So I haven't taken that. That's not long because it hasn't crossed again. I'm waiting for another flip down of the parabolic SAR to re-enter as a continuation. So that would have been a continuation entry there. So that would have been a losing trade, and this is very much a winning trade from that downtrend there on that candle there. So we'd have got in there, and we trail the stop loss down. Stop loss could either be at the parabolic SARs, like a catastrophic stop loss to start off with, or again you count the candles down. So there, then there, and currently our stop loss would be here as we're moving down. Strong red histograms. The signal line and the MACD line moving down quite strongly. Nice air between them, light between them. So just stay short. Say the completion of this candle, I might get a bit aggressive with the stop loss, move it down halfway to there. So that's still short and has been since 25 past 6, and we're nicely in the money at the moment. And so we'd have got in. I say you can automate. This is very, very easy to code. So we'd have got in there. My stop loss is would be currently there. So this is guaranteed profit from 49,767 to 49,670. Whatever that is, what's that? 767, 670. So 97 points down the Dow. Here in this 5 minutes. So, and now that candle's complete, I'm happy to pull that down, locking in some profits. I could have left it there, getting a bit too aggressive. You can get that, but this is looking quite positive. The only caveat is that's it's the current candle. It's pink rather than red, but we'll see where that finishes. So that's short as well. Anyway, Matt, I don't know if you're still here. I'm going to wrap this up now. I'm going to go and get a hot cup of coffee now because that one's freezing cold. Thank you for joining me, Matt. I appreciate that. Tomorrow we'll be live for the US Open. So we're going to trade the US Open tomorrow. We have got some other data earlier on tomorrow. Where's my calendar gone? It's disappeared. Is our the Forex Factory calendar. So Thursday, Thursday we got Aussie jobs overnight in a couple of hours, and claims out of the US also, and the Philly Fed and pending home sales. Also, I didn't comment on the RBNZ, did I? They got that. They did maintain rates at 2.25% as expected, but many were talking about a potential cut this year, and that was less hawkish. Really, the hawks really disappointed, so it was less talk about that for a hike in. Did I say cut? I meant by the end of the year, so that didn't happen. So we got clobbered on. If you were along the Kiwi, you got clobbered. The Kiwi got clobbered on that less hawkish than expected RBNZ statement from this morning. So there we are. The Dow Jones actually I haven't led that. So let's just leave you with the forex market. So euro 117.86. So we're down again from when we were talking earlier. So again, another one here that's gone short there and moved down, gone out because that's flipped. Perhaps gone short again, and it's a bit weak because we've crossed that. See, that's crossing now. This is now looking to go long, except we haven't crossed for the parabolic star. So there's been quite a good cross there on the MACD. Okay, in the D line, we got a flat. Interesting, we got flattened out. We got the parabolic star right on 117.86. So this might be looking to flip, and speculators might have already. Some people have already bought this down here, this 117.85 area. So that might be a speculative bid. But we are, that is 15. That's 15 pips below the key 118 area. Ahead of the data, and then we moved down subsequent. That's a 7 o'clock 5-minute candle, and then we've moved lower again. So dollar having a good evening, good afternoon session in the US. So that may be looking to buy, but it may be just a stall before we go another leg lower. I'd have to look at some higher time frames, and there's 117.79. That's on there for some reason. I don't know why, but they're usually there for a reason. So anyway, that's looking to go long there on the 5-minute, but it hasn't confirmed yet with the flip of the parabolic star. But we got flatness, that's why. And parabolic stars are great when you got a strong trend, not so good when we got sideways action. MACD, lots of information in the MACD. That's gone positive there. So anyway, that's the euro. And finally, let's show you the Kiwi, because that's been a big mover today. Up to the hourly chart. Following the announcement this morning, and it's been a big. We've made some nice pips on the. We were 20 pips, 40 odd pip points. We took close half our position. Actually, let's show you that in our layout. Then I will definitely go. Okay, I do need to go. It's a bit tight as well. Now it's 10 to 8 here in London, and it's still raining outside. It's completely miserable. So this was our sorry, let's just take this up to the hourly chart. Sorry, we were short this. We've been short this for ages, haven't we? It was Friday night, wasn't it? And it's been chopping around, not going anywhere. It looked like we were short. The target was down here. It looked like we were getting there, went back up, but didn't really move away from our entry very much. Didn't move away from our target. I nearly closed it yesterday, and I thought, oh, the RBNZ are coming, so it's been open this long, let's leave it. So we did then crash through 60 and got to our target this morning, and then we reversed. Subsequent to that, I've pulled the stop loss right down, and it's continued to decline. So I'm going to move that again. The stop loss, not the target, the stop loss down. Obviously, I'm not actually live on here, but I'll certainly move it down to here on that. So we're got at least another 22 points or whatever it was to bag on the Kiwi as we continue to decline. 59.60 at the moment. So I will leave you that one because we're in the money on that one. It's the only live account I've got open at the moment. Okay, take care, everyone. I will see you tomorrow for some live trading for the US Open. I'll have a camera on then. I'll be back in my normal office. But until then, be safe, be kind, and may the pips be with you, my friends. All the best. Bye-bye.